Hello, chart watchers and Decision Point faithful. Welcome to this Friday, May 3rd, 2019 Decision Point show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, we do welcome you back. All right. How is it going this fine day, Dad?
Well, you live in the neighborhood, so it's very beautiful, isn't it?
Yes, it actually is. No, it's a beautiful day. A beautiful day in the neighborhood, as they say. All right, well, let's get started here. Our agenda for the day. It is the end of the month, so we will look at our monthly charts. Of course, I'll cover the broad market indexes and price relative with the S&P. We'll, of course, look at our DP indicators. Carl and I will see them for the first time since they just went final. And then the big four. Carl will cover dollar, gold, oil, and bonds. And then, of course, for the bonus, which everyone's always waiting for, we're going to look at the Bullish percent index. So stay tuned for all of that. Let's go ahead and start with the decision point scoreboards, however. First up is looking at all of these new PMO sell signals, and these all arrived this week, starting with the Dow, not a surprise with the weakness it has been showing as of late. The OEX was the last one. Yesterday we did get, yesterday was the OEX, and the day before was the S&P 500 and Nasdaq. So, you know, really the trends are still to the upside because we're still on buy signals as far as the trend is concerned. The 20 is above the 50, is above the 200. So all of that looks good, which is why we have all these buy signals on the top. So the trend still looks good. The problem is momentum right now. And we'll look at those charts more closely. Decision point scoreboard. As you can see right now, we're waiting on XLE to get a buy signal. It has certainly been the laggard. I know that currently the scooter for XLE is 4.7. Almost as bad as it can get for you. So we're waiting for the 50 to cross above that 200-day EMA to get rid of that sell signal. The other is, of course, the neutral signal on healthcare. That will go away as soon as the 20 crosses above the 50, and we don't have that just yet. All right, let's go look at some charts. Get my mouse to cooperate here. All righty. Well, we're going to start with the price relative of most of these indexes to the S&P 500. I think really the interesting information right now, of course, we're seeing the industrials underperform the S&P, not a surprise. And Nasdaq 100 is certainly leading the way. Technology has been leading the market higher at this point, and that's proof there. The interesting ones I noticed was both the OEX mid caps and small caps are all pretty much performing in line with the S&P 500 right now. We're not seeing any kind of leadership on any of these. Next up, let's just look at the price charts here for the broad market. At this point, one of the things that I did want to point out is looking at the highs that we had back here in September and in January at the beginning of the bear market. I decided to mark off whether we're seeing new highs or not. And as you can see with the equal weight, we have seen some new highs, all-time highs. S&P 400, we're still looking for some margin to be covered here. And notice with small caps, huge difference on reaching the top that we saw back here in August-September timeframe. But I do note that today we did see a breakout for the small caps, whereas we didn't really see that on any of the other indexes. The Nasdaq 100, of course, you can see did make new highs. And again, it is showing the most strength and seems to be leading at this point the market higher. Looking at the global markets, we've been trying to watch to see if anybody is moving out of their bear market situation. I mean, obviously, we hit those new highs ourselves back here in September on the SPY, and we're continuing to make new highs now. So, but what's happening around the world? Well, Germany has finally broken out of its declining trend here, its bear market. Canada really hasn't suffered too much in comparison to the S&P 500, and you can see it is trying to poke up here and make some new highs off of the high that we had back here in that September, August timeframe. Actually, looks like July for the TSX. France still hasn't broken out. UK, nope. Japan, still pretty far. India, really trying, but finding that declining tops, that declining trend, very difficult to maneuver out of at this point. And China, really the same thing. We're seeing that recovery, but not enough to get it above, out of its bear market situation. All right, let's look very quickly at the scoreboard indexes. The Dow at this point, again, you're seeing problems. It's not leading. It hasn't been able to make new all-time highs. We have the sell signal that I noted at the beginning of the program. And as you can see, OBV tops have been rising. Volume seems to have been there, but price is not cooperating here. And that would be a negative. Well, actually, I think that one is a reverse divergence because we're looking at rising tops on our indicator. Volume is not supporting the rally higher, and it's, again, we're seeing that margin. We haven't been able to get past the all-time highs. Weekly chart, nothing really changed here. Still looking at the PMO buy signal, and it is still rising strongly on the weekly chart. Monthly chart, however, and this monthly chart is different from the other three I'm going to show you. Note in the thumbnail that we are seeing momentum in the long term. The long-term PMO is starting to move downward yet again. You can see when we've had previous sell signals, it's generally, the calm, not the calm before a storm, but it certainly lets us know that there are some problems going on. We didn't get that so much back here, but you can see in just about every case, those sell signals resulted at least in a somewhat of a downtrend. So we could be looking for more weakness ahead for the Dow Industrials. All right, Nasdaq, as I said, made new all-time highs and actually is trading above those, the tops we saw back here in August and October, September. So again, we're seeing better indications out there as far as the Nasdaq 100 and technology. Still on a sell signal, but already trying to turn itself back around. Weekly chart for the Nasdaq 100. Again, see the breakout to those new all-time highs. PMO buy signal is still intact. And now when you look at the monthly chart for the Nasdaq 100, there you go, again, the breakout to new highs. But difference, again, on these monthly charts, you can see that the PMO is turned upward. It's really making an effort at this point to get up there and get a buy signal. OEX, not really different from the S&P 500, still on a sell signal, showing some deceleration as far as the PMO. And the weekly chart shows you how we were stopped at those all-time highs for the OEX. And finally, we've been looking at this rising bottoms trend line for a while here on the weekly chart, and we broke down from that. And we've talked about how a really steep rising bottoms trend line is very hard to maintain, and it does look like we may start seeing the breakdown here. We did close above it, though, for the week. Monthly, not much here, but noting that the PMO on the monthly chart is trying to rise toward a buy signal. So again, that's good to see. S&P 500. Bearish rising wedge is still here. I think it's somewhat positive, that we hit this rising bottoms trend line and we're able to bounce up off of that. However, the formation is still there. It still tells us to expect a breakdown from this rising bottoms trend line. So we'll keep an eye on that. Today's move to the upside, certainly encouraging, but we still have that PMO sell signal there. Volume is still supporting a move to continue higher here on the S&P. Weekly chart, it's managing to hold on to that steep rising bottoms trend line, unlike the S&P 100, still on the buy signal. And the monthly chart, as you can see, S&P 500 long-term PMO trying to make a rise, trying to get back up and get that buy signal again. I always find it encouraging when we do see the PMO turning up and accelerating upward. So I'm encouraged by that, but we're not there yet. We don't have that buy signal. All right, let's look at some indicators. Let's see if they have gone final. I suspect They have indeed. Wow, look at this, Dad.
Yeah.
Let's get these moved up. Somewhat climactic here on new highs. But wow, look at the advances minus declines here on breadth. Certainly climactic reading there. And I would say somewhat climactic here, certainly climactic for the past, for this year, I would say. And there you go. There's yesterday and the day before we saw that penetration of the lower Bollinger Band for the VIX on an inverted scale. And when you start seeing a rise in the VIX and you get that puncture below the lower Bollinger Band, typically you start looking for higher prices. We've now started to move back up into the VIX. How would you read this as far as these climactic readings? Does it look like a initiation?
I think that it's, first of all, we don't have a very big price move.
Right.
And since price is still maintaining the uptrend, we have to interpret this as a exhaustion climax.
Okay.
Okay, because if you were coming up on a bottom, or if the trend has shifted, which it hasn't, it'd be another story. But as it's at the top of a rising trend, it's more of exhaustion. This is we'll know better later, of course.
Yes.
But we're at least alerted to the fact that we could run into some problems here.
Mm-hmm. All right. Yeah, I definitely agree with that. All righty. Short-term indicators. All right. We suspected that they would start rising, both of them today, and they have. I would say the main thing I would point out here in the shorter term on these indicators is the fact we do have rising prices, but we're getting the negative divergence here. We're seeing lower tops on the Swenland trading oscillator for breadth. And for the volume, we're seeing mostly sideways. So I would consider both of those a negative divergence with what's going on. So while we did, it looks like breakout above the top here for the S&P 500, I'm not liking the setup of the negative divergence. And now that I've seen the climactic chart indicators, I think it's telling us the same thing, that we should be aware and cautious moving forward short term. Intermediate term, I'm not liking at all. I haven't. We've had this negative divergence in play for some time. We are seeing the indicators moving up today. Looks like sideways for the ITVM, which is encouraging. But as you can see, we get a lot of twitch out of these indicators. So, I'm not going to get excited about these indicators rising until they start getting a lot closer to the signal line. All right, you're up.
Okay. UUP. Okay. I'm not getting a lot out of this chart. We do have a rising wedge formation slightly, not much of a elevation on the top line. But so it broke out of that the wrong way, which is bullish indication. But your PMO, the daily PMO, is actually turned down. And let's take a look at the weekly. Gives a much better context. Okay, we see just above, we've got really long-term resistance. And the rising wedge formation here is still intact. So we haven't got a breakout from the top side of that one because we're using a longer term top to draw the line. The weekly PMO is almost flat. It's showing a little bit of weakness, but right now I'd say I don't look for the UUP to go above that resistance. I mean, that would be my expectation.
All right.
See what the monthly looks like. Okay, again, there's looking back all the way back to 2008 and 9, the top that's the long-term resistance for UUP.
Yeah.
Remember, what we're looking at with the ETF of the dollar index, we're looking at a portfolio of futures contracts, and so the rollover losses that you get are built into this. So it's more accurate. It's an accurate picture of what it would be like if you were trying to buy those futures and manage your portfolio. Okay, let's move on to gold.
What the heck's going on here?
Head and shoulders formation. The neckline broke, and then it bounced back up to the point of breakdown, which is a technical expectation. Then started moving down again, but today it's being more encouraging, and it looks like the PMO actually turned up again. But I not real optimistic about gold. It's just a heartbreaker. We still haven't gotten people are not interested in it, as you can tell by the huge discounts that the Physical Gold Trust is trading at. It's the discount. It means that people are paying less than the actual value of the portfolio.
All right. And yeah, these are high discount rates, but as I pointed out when I wrote my DP alert on Wednesday, is clearly they can persist. It's not like this bit.
Yeah. But it's we're a long way though from starting to see green bars above the zero line.
Yep.
Let's check the weekly. Okay, I'm still showing a flag, appendage-like formation of a falling wedge formation, which should resolve to the upside. What goes against that? We've got the PMO. The weekly PMO is just turned negative and is going down below the signal line.
Monthly,
still in a trading range.
Yeah, boring trading range.
And the monthly PMO has been moving sideways for about a year, and it's above the zero line. So it's basically saying you've got primarily positive pressures on the price, which is good, but it's not very much because it's just barely above the zero line.
Okay.
USO broke down this week below the rising trend line. The daily PMO was at 4, and that's pretty overthought for this security. And that's a falling wedge, by the way, which we would expect to go upward. So we could see this improve based on that. And the monthly chart, basically sideways for years. That high in 2018.
Yeah, back here.
That's about $76 a barrel for oil. And I said before, I don't think that we're going to get back to there even, but I don't think we're going to exceed it. The monthly PMO is positive, but it's still below the zero line. I should say it's moving in a positive direction, but still below the zero line. I think there's just with the oil production that the U.S. is producing, it's I don't think there's much of a shortage out there anymore.
Mm-hmm. Bonds.
Okay. You see it starting earlier this year. We had a flag formation. It broke out of that, set new highs at the end of March. Now we have a falling wedge, and it resolved upward as like it's supposed to. Although since it broke out, it's kind of choppy. It's hard to get a sense of what it might do. Mm-hmm. And the PMO is telling the similar story. It's above the zero line, but moving sideways. So it's not. Let's take a look at the weekly. You get a better feel. Sometimes you just don't get enough context. Okay, so here we are looking. It's chopping around through 2-year resistance line, and the all-time high, I would believe, is yeah, there you go. And so that would be the ultimate resistance. Right now, the weekly PMO is rising, but it's above the zero line, and so it's looking strong right now. But as you can see, price is becoming more churny, shall we say?
Mm-hmm.
Okay, monthly chart. Monthly PMO looks good. It's rising and it's above the signal line. You can see that we had a rising trend line that had broken down, but the price got back up above it. So it's looking positive.
All right.
I would say, given the fact that they're holding interest rates where they are, I don't look for this to go significantly higher.
Right. No, I hear you. All right. Bonus time. Bullish percent index. We're going to look at it with the broad markets.
Okay. So just to refresh, the bullish percent index, the BPI, is the percent of stocks within the given index that are on point and figure buy signals. You notice that the S&P 500 BPI it's not quite back up to where it was in the beginning of 2018, but I'd say I like that. I mean, I don't think it's so. I don't think that divergence is significant,
mm-hmm.
especially with that much space between the tops.
Right.
But the Nasdaq composite, it's not nearly as high. And the Nasdaq, has the Nasdaq made new highs? Do you know?
Yes.
Okay, the composite. Okay.
Oh, the composite. Yeah, I'd have to look.
But I don't think this is going to confirm where the price of the Nasdaq index is. And New York Stock Exchange is doing better than the Nasdaq, but it's still, look, they're down at 60%. And the Nasdaq is below 60. It's about 55.
Mm-hmm. That's kind of surprising to me, given the leadership we've seen from the Nasdaq and the Nasdaq 100. I mean, tech has been, doing pretty well. So that's clearly the Nasdaq 100 is being led by, those top holdings, those top members, components. That's all. I mean, that's what I would think here. Yeah.
Well, the problem that composite that there's an awful lot of junk in that index.
Mm-hmm.
That's just the reality of it. Okay, let's take a look at the last chart here, and we've got what, maybe 4 minutes to go.
4.
Couple things I wanted to show you here. Can you scroll that up? Well, I guess that's good. No, that'll be good. Let's look right now where we are. Notice we had the bear market decline, and BPI got quite low, historically speaking, but it did a real rocket move upward. And so there was an article that Chip flagged about the BPI, and what they pointed out in there that this is a very sharp, rapid recovery from the lows that we had. But if you look over on the thumbnail, notice the thumbnail, we've got a negative divergence there.
Mm.
Not terrible, but it's kind of a short-term phenomenon right now.
Mm-hmm.
And the green ellipses indicate bull market declines, pullbacks, consolidations.
Mm-hmm.
Notice we had on those, the bottoms of those, we had positive divergences for the indicator. Very, very good, helpful thing. Double bottoms. This spike bottom we got this year is, well, it happens. Something. And you wait for the pullback, and it never ever comes, and it never even tried. But so we don't have that kind of the positive divergence going for us there because it just spiked. There's a lot of stuff to look at on this chart. But I better point out some. Let's take the circle on the left there. I'm pointing that out because probably the average BPI right in there is probably around 50. That's 50% as the market is making new highs, new all-time highs. And that was an unusual circumstance because people in the prior 10 years were getting really interested in the stock market, and large cap stocks were in the focus. So what we had here as the market was going into the all-time highs in 2000 was a bunch of large cap stocks. Well, I should say a handful of large cap stocks driving the index.
Wow. Well, there is a lot to cover on this chart. I don't know if we will bring it back next week, possibly. But another great bonus section. I appreciate you bringing on. But at this point, it is time to say goodbye to everybody. I do want to thank you, Dad, for being here, of course, every Friday with me. But I also want to thank everybody out there for being with us today. Do remember to complete that survey as you exit. We love to get your feedback and hear what you think of the DP show, maybe what you might want to see on the DP show. And as a quick reminder, Decision Point does air on Fridays at 4:30 p.m. Eastern. Have a very good weekend, everybody, and we will see you back here next Friday. I will see you on Market Watchers Live Monday morning. Happy trading.